Welcome back to G Fun Facts Online, where we dive deep into the fascinating and sometimes perplexing world around us. Today, we're shifting gears from the usual quirks of nature or historical oddities to something that affects every single one of us, the global economy. Specifically, what's the vibe in May 2025? Buckle up, because it's a bit of a roller coaster. Imagine the global economy as a giant, intricate machine. Right now, in May 2025, some of its gears are grinding a little louder than usual. We're seeing a cautious mood among consumers. New tariffs are really shaking up how countries trade with each other, and that old foe, inflation, is still lurking in the background. While some parts of the world are holding up okay, the general forecast is for things to slow down a bit. Think of it like a car that's been cruising at highway speed now tapping the brakes because of some fog ahead. This uncertainty is making everyone, from big companies to you and me, think twice before spending or investing big. Let's talk about how people are feeling consumer sentiment. It's a real mixed bag. In the United States, for example, confidence has taken a bit of a nosedive. The University of Michigan's Consumer Sentiment Index, a key measure of this, fell for the fourth month straight in April 2025, hitting its lowest point since July 2022. Why the gloom? People are worried about trade policies and the chance that inflation might make a comeback. They're seeing risks out there and aren't expecting their paychecks to grow as much. In fact, a whopping 56% of U.S. consumers are seriously concerned about how trade wars and import tariffs will jack up prices. This means folks are holding back on buying non-essential goodies and are hunting for bargains. And it's not just an American story. Over in Europe, consumer confidence in both the EU and the Euro area also dipped in April, moving further away from what's considered normal. Australia is seeing a similar trend, with worries about tariffs and where interest rates are headed, though their federal budget did give a tiny boost of positivity. So what does this all mean? Globally, households are tightening their belts. This caution could lead to less spending, and consumer spending is a huge engine for economic growth. Persistent inflation, the rising cost of just living, and worries about job security are all playing a part in this more careful outlook. Now let's get to a major player in this economic drama: tariffs. Specifically, new and escalating tariffs, especially from the United States, are making massive waves. We're talking about sweeping U.S. tariff increases that are turning global trade on its head. Some analyses are projecting that these tariffs will cause sharp drops in trade volumes and could hurt economies, especially the U.S. itself. To give you an idea of the scale, imagine the average U.S. tariff rate. In 2024, it was around 2.2%. Fast forward to 2025, and under some scenarios, that could jump to anywhere between 7.1% and 17.0%. Some tariffs, particularly on goods from China, have skyrocketed, with potential baseline rates of 125% to 145% if China retaliates in kind. We haven't seen numbers like that since the 1930s or 40s. That's a serious throwback, and not in a fun, retro way. The fallout from these tariffs is pretty widespread. First off, global merchandise trade, which was growing in 2024, is actually expected to shrink in 2025. Projections vary, but we could see a contraction of anywhere from 0.2% to 1.5%. Then there's the impact on economic growth, or GDP. Many big institutions have had to lower their growth forecasts for 2025 because of these tariffs. The IMF, for instance, cut its U.S. growth forecast for 2025 from 2.7% down to 1.8%. Deloitte thinks U.S. GDP growth could slow to 1.5% in 2025 and even down to 0.7% in 2026 if significant tariffs stick around. J.P. Morgan Research also revised U.S. GDP growth down and now sees a 40% chance of a global recession. That's a sobering statistic. And what about prices? Well, tariffs usually mean higher prices. The Yale Budget Lab estimates that all these 2025 tariffs could push U.S. prices up by 2.9% in the short term. For an average household, that's like losing $4,700 in purchasing power. Ouch. We're expecting to see the first signs of this in the April 2025 inflation reports, with bigger impacts showing up later as the higher costs of materials work their way down to the stuff we buy in stores. Think about clothes. Apparel prices are predicted to see some particularly sharp increases. These tariffs are also forcing businesses to rethink where they get their supplies. This could lead to big shifts in where things are made, and a global trade system that's less efficient and harder to navigate. Interestingly, Mexico has reportedly overtaken China as the top U.S. trading partner in early 2025, a direct consequence of these shifts. For businesses, it means higher costs and a lot of uncertainty, which isn't great for investment. For households, it means less buying power and potentially fewer jobs. Some estimates suggest the U.S. could see between 671,000 and 770,000 fewer jobs because of all this. Even central banks, the folks who manage interest rates, might find their hands tied. They might want to cut interest rates to boost the economy, but tariff-induced inflation could make that difficult. Some countries, like China and those in the Eurozone, might try to use government spending to soften the blow. So what's the overall economic picture for May 2025? We're in a period of major adjustment. While most experts aren't predicting a full-blown recession caused solely by tariffs just yet, the risks are definitely higher. Economic growth is generally expected to be slower than we've seen in recent years. Uncertainty is the word of the day. How long will these tariffs last? Will there be more retaliation? Can businesses find clever ways to manage, like using AI to streamline their logistics and cut costs? These are all big question marks. Right now, businesses and consumers are adapting. For us, it means being smarter with our money and maybe changing what we buy. For businesses, it's all about being resilient, controlling costs, and figuring out how to navigate this new, complicated trade world. It's a dynamic situation, and one that calls for keeping a close eye on the economic tea leaves. Thanks for tuning in to G Fun Facts Online. We'll keep exploring the surprising and impactful forces shaping our world. Until next time, stay curious.